Hello everyone, newborn investor here and welcome to another video. Today we are going to come up with the intrinsic value of NIO and the reasons why I am not buying NIO at the current price levels. So if you're interested, make sure to stick around as we are starting right now. NIO, along with its EV peers, was on a roll last week as investors were increasingly optimistic about the EV market. Because of this optimism, NIO took off, making new highs. However, despite this positive outlook, last week, NIO dropped almost 17% from the weekly highs to close around $44.56. This drop was unprecedented and was mostly due to a report published by short seller Citron Research. As I've said previously, I always take short seller reports with a pinch of salt, and this one from Citron was no different. So I went ahead and took a deeper look at the company financials to predict the intrinsic value of NIO so you know exactly when to buy the stock. I would also like to share my 2 cents on Citrons Allégations, and we'll get to it in a minute. But before that, if you like the video and find it valuable, please make sure to hit the like and subscribe button. I really appreciate your support as it keeps me motivated to put in the long hours for making these videos. Alright, let's move on. I am bullish on NIO and the EV market, and that does not mean every day is a buying opportunity. NIO and its competition rose sharply after Joe Biden claimed victory, and I expect this trend to continue for a while before reality pitches in. There is a strong disconnect between the stock price and the company valuation, and at some point a correction needs to happen. I don't want to be that investor who buys the top just to see my investment drop like a falling knife. There is no doubt on the future of EV adoption and its market size, but my problem is pricing. Your returns heavily depend on the entry price, and I think NIO is a wonderful deal for investors who got in early with a price below $25. There is no denying the fact that I missed the NIO train, and waiting for a pullback may sound like a dumb idea, but I feel that is the right thing to do. Last week, short seller Citron Research came up with a bearish report on NIO, reversing its previous bullish call back in 2018. NIO stock plummeted and fell 15% in intraday trading after Andrew Left from Citron said, quote, "Anyone buying NIO stock now is not buying a company or its prospects, rather you're buying the 3 letters that move on a screen." Left was bullish on NIO in 2018 upon the company's IPO, but with NIO's valuation up over $60 billion, he is no longer bullish on NIO. Citron also gave a $25 price target for NIO stock, which is 50% lower than its market price. Citron also raised concerns over NIO's new hatchback model ES6, a key player which is supposed to help NIO shift from luxurious EV segment to affordable utility cars. The short seller considered Tesla's Model Y with its aggressive pricing to be a serious threat to NIO's model ES6, but I am not buying it. Like the traditional passenger car market where Ford, GM, Toyota and others own significant market share, the EV market is huge, and I certainly believe that NIO would have its fair share. NIO continues to trim down their losses with every passing quarter, and with a rapid increase in deliveries, I expect the company to be profitable in the near future. But I think most of us agree that NIO is overvalued at this time. This leads us to a very important question. What is the actual price of NIO? A number of analysts believe that the stock is trading well over its mean target price, and according to most estimates, NIO is trading at twice its intrinsic value. That being said, we will estimate NIO's intrinsic value through a price to revenue valuation model. I prefer to use the price to earnings or the discounted cash flow valuation model over price to revenue, but since NIO does not have earnings and free cash flow, I would have to go with the price to revenue valuation model. This model has its own limitations, and like any model, is only good as its assumptions. Before we get to the model, I just want to let you all know that the scope of this video is not to explain the valuation model, but to arrive at the intrinsic value of NIO. But if you're interested to know more about valuation, I've already done a video on discounted cash flow valuation and how it works. You can find the link to the video in the description below, and I highly recommend you watching that video. Nevertheless, you should be okay to skip the calculations as I've done them for you. So let's move on. Firstly, based on historical growth rate, we assume NIO's revenue to grow at 60% for the next 2 years. Next, we will look at the price to revenue model of NIO under 3 different scenarios. On a bearish sentiment, let's assume that the stock will trade around 5 times price to revenue multiple. So the market cap target would be 5 times revenue, and we forecast that into 2022. The further you estimate, the less effective the model becomes. We then take the market cap and divide it by the number of outstanding shares to get the price target for that particular year. This would be our estimated target price for a bearish scenario. Now that out of the way, let's estimate for the 2 bullish scenarios. The first one being extremely bullish with a price to revenue multiple of 10, and the second one being a median bullish scenario with a price to revenue multiple of 7.5. Doing so, we end up with the estimated target price for the 3 scenarios for the different years, and we have to finally discount the target price to today's price. To discount the target price, we need to calculate the discount rate, for which I have used the weighted average cost of capital. The discount rate comes out to be 10.8%, and discounting the 2022 target price to today's price will get us to the intrinsic value of NIO for the 3 scenarios. For the bullish case, it is $27.53. For the bearish case, it is $13.77, and for the median bullish case, it is $20.65. The intrinsic value we found is an estimate and is best used in conjunction with other valuation models and analyst estimates. It was a pretty conservative model, and with all the assumptions that I've used, I think the stock is overvalued. However, it's tough to say whether there would be a pullback anytime soon. But I'll keep waiting for the right opportunity. If not, I will move on. Overall, NIO is another example of a business that has tremendous opportunities for growth down the road. But this does not mean that the stock price accurately reflects those opportunities. NIO to me has likely overachieved what its true business reflects at this point, and that is just my opinion. Now, I would love to hear from you guys. What do you think about NIO and its valuation? Leave a comment below with your answer and I will be sure to follow up with you. Also, if you liked this video and found it valuable, make sure to hit the like and subscribe button. I really appreciate your support. So until you hear from me again, stay safe and thanks for watching. Bye.